Hey, it's Mark from Caliber Home Loans. Happy Friday. We'll do a quick market overview, and then we'll get into, there's some talk about maybe getting some Fed fund reductions, some rate reductions sooner than expected. So first, let's go through the market. So what you're looking at is the chart for today. Again, remember, this is the chart for the price of the bond and not the rate. As the price goes up, the rate goes down. There's a little bit of an improvement since the open. Rates stayed pretty consistent for the day. So let's look at the week. The week we see an increase in the price over the week. Again, not a whole lot of increase. So rates, for the most part, ended where they started in the beginning of the week. And then over the month, you can tell that we've definitely had an increase in the price. So rates are still on a downward trend. I'm not sure where this is going to end. We got a jobs report out today that was very discouraging. So the amount of jobs that were added in May were a lot less than was expected. Typically when that happens, that's bad news for Main Street and good news for bonds. So typically we would see a big jump a big jump in the price and a reduction in the rate. We didn't really see much of anything today, though. It just didn't develop for us. It did decrease rates on the government bonds, and the stock market had a great day, but for the mortgage-backed securities didn't really do much of anything. And then since the beginning of the year, we are certainly on a downward trend in rates. So rates are still extremely good. They're trending down. So again, great time to buy, great time to refinance. If you're looking at refinancing, now would be a good time to check out your options and see whether it's worth it or not. I do no-cost refinance analysis for anybody that needs one. So let's talk about Fed funds rate. So at the beginning of the year, we figured that, well, maybe there'd be a Fed funds rate decrease sometime September, October, November, sometime towards the end of the year based on what they thought was going to happen in the economy. But based on the lower than expected job growth, not that it's a trend at the moment, but there is a downward job growth. So now we're thinking that maybe we could get a decrease in August, July, August, September, somewhere. It depends on next month's numbers also when they come out in early July. So that would be good for credit cards, home equity lines of credit, that type of thing. It has absolutely no impact on mortgage rates. So the Fed funds rate and the mortgage rates operate completely separately. And if the investors in the mortgage market think that the Fed is lowering rates before they need to, they consider it inflationary, and they'll actually raise rates to compensate. So you got to kind of be careful, and be careful what you wish for. So we'll keep an eye on this, though. We'll see what happens as the economic trends continue. So as I pushed out earlier, yesterday, MSHDA has increased their maximum asset cap. What that means is MSHDA buyers using down payment assistance can now have up to $20,000 in liquid assets. It was $10,000. So this is a big deal because a lot of times we'd have people that would qualify for MSHDA, but even with the $10,000, if they're buying a higher priced house, MSHDA goes to $224,000 in purchase price. If the taxes were high enough, they still weren't able to get into a house. So MSHDA is hoping that they can help more families. We're hoping that they increase the DPA amount, the down payment assistance amount, from $7,500 to $10,000. It's been at $7,500 for a long time. I'd also like to see them up the purchase price. It's been sitting at $224,000 for a long time. But so far this year, they've increased the income caps and the asset caps, so hopefully there's more to come. I'll be around all weekend. Give me a shout if you need anything, 248-705-8431. Thanks a lot.